are thrilled for today's discussion, AI and extraordinary accelerant for venture-style growth. Today's panel includes Mach 49's own Chief Strategy Officer, Chris Tacy, and venture builder Thor Muller. The discussion is moderated by Kahn, CEO of GK Digital Ventures. All three are experts in the vast world of AI and its many applications. Chris has worked at the intersection of business, innovation, and strategy and entrepreneurship for over 25 years. A seasoned C-suite executive and board member at both private and public companies, he leverages a wealth of industry knowledge and experience, which he brings to bear in envisioning and engineering the future of Mach 49. As a product-centric venture builder, Thor works with global new venture teams to accelerate the identification of product market fit in complex, rapidly changing markets. Whether acting as an architect, strategist, team lead, or mentor, Thor leverages expertise in software and hardware, media, human-centered design, and full-stack business operations to bring innovative venture concepts to fruition. And Kahn is a catalytic force in the technology, media, and entertainment industries, renowned for connecting innovators with investors, growing brands, and driving billions of dollars in transactional deals. Earning the trust and respect of some of the biggest companies in the world, he has an unparalleled reputation for making the impossible possible. So welcome, everyone. We're going to dive in. Getting us started today is Mach 49 CRO Mark Simoncelli to briefly share a bit about Mach 49 before handing it off to Greg. So welcome, Mark. Let's get started.
Thank you. So lovely to see some familiar faces. Thank you so much for joining us today. Really excited to have this discussion. What I'm excited about is what I'm hearing. I'm having a number of conversations. I'm currently at an event in San Francisco. A lot of AI startups are presenting, and I'm starting to see a lot more focus on growth. You know, initially, a lot of the discussions around operational improvement, how we can gain efficiency. But what we're starting to see now is companies really exploring how they can leverage AI to accelerate some of those growth opportunities that are abound. So really excited to dig in today. Just a quick introduction to Mach 49. I know many of these familiar faces I can see, obviously know about Mach 49, but just a quick introduction to the company for those that aren't familiar with our company. We really are focused on venture style growth. And we really see that in a number of different ways. It's either building new lines of business, so through venture building, so finding ways of really exploring adjacent market opportunities and launching those as new lines of business. We're also seeing a real uptick in terms of AI as well. So we're using AI not only around efficiency, but really to explore how we can achieve some of this venture style growth through building new lines of business. Clearly, you know, as I'm seeing, I've seen a whole lot of startups the last 2 days. A lot of them are using AI and material sciences and a whole lot of different user cases. Clearly, through investing, it's a very hot topic as well for AI. So we do a lot of work around, you know, venture investing and helping our companies obviously work with startups in an interesting way. Venture turnarounds is taking in-flight ventures and really seeing how we can further accelerate those. So really exciting to see this new line of business take off within Mach 49. So clients are coming to us and saying, hey, we have this venture. Can you help further accelerate it? It's a little bit stuck. Might be around product market fit. It might be around the unit economics, and really just figuring out how we can further accelerate that. We have a whole lot of exciting work with our Growth Institute, where we're taking a lot of the work we've been doing and just packaging that as a unique offering with, particularly to work with the motherships inside large organizations. Our Growth Creative is our internal design agency. What is so important in this journey is being able to sell and tell the story. And the team does a phenomenal job of really building out that narrative and in enabling that from to shift, because AI is part of saying, you know, how do we embed that as part of our portfolio as we shift our organization to that next frontier of growth. And then finally, you know, not only do we look to democratize everything we do, but we've digitized everything we do through 2401. And what we're excited about with our SaaS digital platform, so think of that as a learning guide, but also a doing guide, a how-to guide. We also using a lot of AI ourselves to see how we can disrupt the venture building journey and how we can speed it up, make it more efficient, and really democratize it. So truly a pleasure to have an amazing panel today. I'm going to hand you over to Greg. Greg and I have spent quite a lot of time on the road the last few weeks. We've been in the metaverse, we've been doing AI. So Greg, delight to have you join us. Thank you so much and look forward to the discussion today. Over to you.
Thank you so much, Mark. And we're not in the metaverse here, we're in real life. So thank you all for being part of this very timely and important discussion. So it's hard to believe that it was less than a year ago, we're about to hit the 1-year mark where ChatGPT became mainstream or started to become mainstream. And that was a transformative moment in the AI landscape. Goldman Sachs projects that AI investments will approach 200 billion by 2025. And that's why we're all here today to have the conversation and discussion around how can companies best prepare themselves, their customers, for what's to come. And Gen AI focuses on a lot of different elements. It spans text, image, audio, even 3D models using patterns and data similar to the human mind. So we're going to cover as much as we can in today's discussion. And I'm so pleased to be joined by Tacy and Thor Muller from Mach 49. We're going to answer some questions, and then I promise to leave some time at the end, about 15 minutes for everybody to weigh in with particular questions that they have. But as we kick off, and Chris, I'm going to start with you. You know, in the past, people have been talking about change is happening faster than ever. It's been going that route for the last 10 to 15 years. But I think today, and having this conversation, this is the fastest that we are seeing change in the marketplace. Just came off of a series of meetings with investors who were talking about within 10 years' time, we could see 80% of industry turned upside down. Would love to get your perspective on what you're seeing in the marketplace, leading strategy for Mach 49. Are we seeing the fastest change that you've witnessed in your career? You know, right now at the end of 2023, is this the fastest change that you've witnessed in the marketplace?
I would say that it probably is, but not by a huge margin, to be honest. The acceleration as compared, for example, to what we saw with the introduction of AWS, it's comparable, but I would say this is incrementally faster even than we saw with AWS. And it's important to understand that the introduction of AWS there's actually a really interesting correlation. You can look at the data of funding round size and number of early stage investments. And every single year, there's kind of a predictable pattern until AWS was released. And within 12 months of AWS being released, the average seed funding size had declined dramatically, but the number of seed rounds had increased dramatically. That impact occurred in less than 12 months. With generative AI, what we're seeing is something that's more like 9 months. So it is faster, but it is only incrementally faster. That's not a bad thing. If you think about the impact that the cloud has had on the world, now imagine the impact that the cloud had on the world happening even more quickly and affecting not just software. That's what we're seeing with AI.
That's awful. And I'm going to ask Thor your perspective from a venture builder standpoint. Are you seeing incremental change, or are you seeing rapid disruption?
Well, it depends on which layer you look at. I agree with Chris that you know, if you would to walk into a business, you would see people, you know, working kind of pretty much similarly to how they worked a year ago, even though they're beginning to incorporate more and more of these tools. And so the adoption rate, obviously, right out of the gate was the fastest adoption rates to fastest path to 100 million users than we've seen with any product, although that was later surpassed with Facebook's Threads, I believe. The real question is how sticky is that? And the answer to that one's more complicated. We've seen that there has been kind of an early surge of use of ChatGPT and tools for the average worker or user, but then something of a cooling. And I don't personally believe that speaks anything to the long-term or even short-term potential of the tool. It just speaks to the way that things get digested inside organizations and inside behavioral patterns. So now I will say that from a developer perspective, the adoption, the integration of AI, particularly LLMs, into applications is the fastest I've ever seen. I don't have a number, but it is trivial to integrate this transformative technology into products. And so we've seen, indeed, it's been integrated into almost every commercial product in the last year. And if it hasn't launched, we know that companies are integrating it in various ways in the R&D space. So that, I think, is unparalleled in terms of an ingredient technology.
Appreciate it. Let's get into the meat. I think we're going to talk about artificial intelligence in general, and then we're going to talk about Gen AI. Many folks have called this the year of AI, right? I don't believe in hype cycles. I think these are all underlying technologies that work in tandem, that many businesses in different industries adopt. But a lot of folks believe in hype cycles. So that means there's a ton of attention from CEOs, from boardrooms around what's happening in this AI movement. And a lot of it is warranted. Chris, my specific question to you is, what are the priorities that investors and entrepreneurs and enterprises should be considering right now at the end of 2023 with so many headwinds from inflation to global disruption? What should they be considering right now regarding artificial intelligence?
I'm going to break it into three different things because it's actually a complicated question. So first of all, they absolutely should be looking at the use of generative AI. And I'm going to be specific on this, generative AI, when it comes to efficiency in certain parts of their operations. They absolutely have to be doing that. If you're a publicly traded company, you don't really have a choice. The second thing they should be looking at, however, is they really should be looking at, okay, how do we use this to actually achieve new and novel kinds of growth? Efficiency is great. Efficiency affects your EBITDA. Efficiency gives you a one-time bump. But unfortunately, at the end of the day, investors are looking for growth. So you're going to have to deliver the growth, even if you do deliver the efficiency. So long-term, you have to start making investments now in being able to deliver new and novel growth in the future. Third thing, you mentioned investments. I would say companies, in particular companies that are doing investments, should be extremely cautious about how they're doing capital investments. I'm not talking about budget spend. I'm talking about investing in other companies. Right now, for example, I would never put a single dollar into a company that is merely skinning a commercial large language model tool. That is a fool's game, and you're going to lose your money. On the other hand, this is going to be long-term a pay-to-play market. And if you look at what Microsoft has achieved through its investment in OpenAI, large corporations need to start getting involved, not in startups that skin existing commercial tools, but in actual new and novel AI.
That's helpful. Okay, so getting past the skimming and the superficial down to real substantive data in, data out from these large language models, LLMs. Thor, let me turn it over to you, and I'd like to ask, kind of on that notion, how does this new wave of generative AI, as evidenced by these commercial applications, consumer applications, ChatGPT and Bard, how does that differ from previous applications of AI? And more specifically, talking about, Chris just mentioned kind of going beyond just surface level. Do you feel that these tools that are out in the marketplace are still too surface level, or can they get to the depth that industry needs?
So I think we're just beginning to explore the full potential of these large language models. And remember, there are a lot of them that we know that even within OpenAI, there are a number of different models and services. And so but just taking the mainstream models, there's GPT-4 in its various flavors, for instance, what we're seeing is that number one, that using it naively may produce relatively shallow results for many applications, but applying know-how to designing systems with these tools can produce remarkable results. And so there's two kinds of know-how that are involved here. One is the know-how to design with AI, with generative AI, and the second is know-how for a given domain. And so we're working with clients and working on projects that we are building tools that leverage large language models, but produce far better results than you would use if you went to the ChatGPT interface. And I think this is really a major pattern that we're seeing. The second aspect is bringing to bear data. So beyond the know-how, like the business practices and depth of knowledge of the domain, if you have data to train a model, and increasingly that's easy to do with OpenAI models and other models, including open source ones, then you can reduce you can amplify or multiply the effects of that know-how, and create moats around your business that you can't otherwise. So I think it's a multidimensional problem that we're faced with when we try to build durable products and solutions, but we're seeing it's definitely doable even with this generation of tools.
Thank you, Thor. We know that there are massive changes happening in the digital world with respect to first-party data, Apple and others, GDPR, and I think that is only becoming more important in this new paradigm of AI about how companies think about their first-party data. Chris, I want to turn it back over to you for a second. You laid out a great framework. I think the first generation of these tools really were about efficiency, operational efficiency, cost efficiency, and we're starting to get to the next wave. And on that next wave, and Mach 49 works with some of the largest Fortune 500s in the world, and these are companies that are faced with the now as well as planning for the future, which is incredibly challenging. How to train your workforce now to use these tools, and then think about what might be coming 5 to 10 years down the line. How do you advise companies in that that are trying to do both at the same time with respect to AI, when it's changing so quickly that the models are changing, the companies are changing, the investments are changing? How do you guide a company today?
I think fundamentally this is actually easier than it seems for most companies. It's difficult at a leadership level because you have to actually focus on two different event horizons. And for leadership, therefore, you're balancing these two different strategic imperatives on two different timelines. That's difficult. However, at an operational level, it's relatively straightforward because one of the two is a operational and IT effort. It's all about technology implementation, processes and policies, organizational structures, et cetera. That's one relatively easy to understand effort. It's the sort of, to use an old phrase, change management that we've been going through, frankly, for the last 30 years. Nothing really different about it. On the other hand, you have the growth opportunities. And this actually is not something that is simply an operational and IT effort. This is something where it is a little bit harder, because what you're effectively going to have to do if you're a large corporation is you're going to have to form a new kind of team if you haven't already done so. This is not R&D. This is not invention. This is a commercial effort. But it's a commercial effort that is moving at a rate of change that large corporations are often not comfortable with, that requires a new way of thinking and a new way of acting. And in many ways, it needs to be isolated from things like IT and business operations. So you have one aspect, the efficiency side, that's relatively easy for large corporations to execute, and another one that's actually a little bit harder. It's focusing on delivering new and novel growth always requires change. Change for a large corporation can be challenging.
Certainly can be. Okay, we have to get the CIO and CTO together with, I guess, the CEO and COO for the longer term. Is two very different beasts that we're kind of tackling at the same time, Chris.
I think that fundamentally what you have is you have one side where it's the CIO and the COO, and you have the other side where it's the CFO and the chief strategy officer. And
Yeah.
then the CEO is the connective tissue across it all, giving you the direction and vision.
Major operational shifts for sure. Thor, I want to turn it back over to you, and you know, we in the lead up to this, and many of our conversations, Mark and I have been having them for weeks around this notion of build, buy, partner, or invest. And I think it's trickier than ever in this AI world, right? You know, I think there are so many different potential opportunities, but also risks that come with those opportunities. What do you see as the current, let's just take the investment side of this equation for the second. What do you think the current outlook is for AI investments, and how does that compare to the dot-com bubble?
Oh, great question. Well, I mean, the dot-com bubble was so different in that we had to get hardware into people, into households and into businesses, and we had to lay infrastructure. And so we were building these great concepts that many of them eventually became billion dollar businesses. Pets.com version 2 was a good business, but version 1 was a giant failure. I think one of the differences here is that we all are all connected, and our behaviors have already changed. We're used to searching online. One of the interesting phenomena is that when you look at how people use ChatGPT, they're often using it like they're using Google. They're searching. So there's the on ramps are trivial now to get people to use these tools, and of course it's being embedded in tools that people already use. So the question is, how does this relate to investment? I think from an investment standpoint, the bet that I think that many investors are making is that this is going to break a lot of models, and that means great opportunities for investors to just, they don't even need to do the act of disrupting. This as a technology that is going to bleed into every other technology is going to do the disrupting, and so if you can spread your bets in the right way, then you have the opportunity to slide into those new niches. And so from that standpoint, it doesn't map really to the dot-com bubble, in my opinion. And it could happen. It's probably going to happen episodically. Not everything's going to break at once, but it's very clear when you see the vast, one of the things that is similar to the dot-com, the web 1.0, is that people would say then that, hey, the internet is going to change everything for everyone, and they were right. The internet has permeated every aspect of business and our personal lives. It just took a while, and people are saying today AI, particularly generative AI, is going to affect and change everything. And so in that regard, we're in good company. And so the real question is, how as an investor can you take advantage from that? And so the other issue is that things were difficult in Web 1.0. It was difficult to stand up a server, to find developers that could develop software for this new world, designers who knew how to design for it. Everything was difficult. Today, everything is easy when it comes to software development. And relatively speaking, we mentioned AWS, instant servers. We have codeless software development. We have myriad of tools that fill in every part of that. So things have become commoditized. It's actually very difficult to find the places to get advantage. Now with large language models, it's in many cases difficult to find where the moats are, if you're just taking things generically. And so, as Chris already mentioned, the challenge is to identify those areas that leverage the business's unique assets, and use a strategic lens and a customer discovery. Well, what we call is customer discovery, which is where are the actual needs in the market that allow us to build durable businesses. So it's a lot, but from an investor standpoint, those are some of the key ingredients.
Thank you, Thor. Chris, I'm going to turn it back over to you and just hone in a little bit more on this investment theme, which is the VCs have, both on the corporate strategic side, have placed quite amount of capital in AI startups over the past year or two. Tell what is, other than the obvious, what's driving the record-breaking investments in this field versus others? And are there any specific areas within that, sectors or industries or specific tools that you're seeing from your work with clients that are the focus of these investments?
So what's driving it? Honestly, it's a combination of FOMO and inability to time the market. We go back to talking about Web 1.0. Yeah, there were a lot of terrible investments. Pets.com. It was a terrible investment in retrospect because the timing of the market was wrong. No one can time the market. So if you're an investor right now, you're trying to figure out, okay, when is AI really going to hit and make these material differences? Because it will change everything. I mean, it's going to be world changing, life changing, reality changing. And VCs look at that and they say, oh, we can make an enormous amount of money. You have no choice but to put your money to work right now because now might be the time. So in terms of what's driving it, that's what's driving it. It's a combination of FOMO and you can't predict the market. You can't miss this. This is one of those situations, people forget that Web 1.0, there were a lot of investors who in the mid 90s said, oh, no, the internet, the web, this is a waste of time. We're going to continue to invest in enterprise software. And it resulted in a significant shakeup in the top quartile of venture investors because you saw really established VCs say, we're not putting money in the web. And all of a sudden, they were filled with regret. No venture investor is going to make that mistake this time. They learned it with Web 1.0. They learned it with the cloud. They're not going to make that mistake again. So they're putting money to work. In terms of what are good investments right now, in all seriousness, this is the same sort of situation again that we saw with Web 1.0 and with the cloud. Good investments are investments where you position yourself, where you invest in a company that is positioning itself to catch this oncoming tsunami. It's about positioning in the market. It is about the size of the opportunity, and if the market timing works out well, will this company simply through the simple fact of its existence and placement in the market win? It's not about execution anymore. Sun Microsystems didn't say, oh, the internet is going to be huge, the web is going to be huge, we're going to make a business of selling servers. They had no strategy around the internet. And then all of a sudden, their ads were the .in.com. They just got lucky. They happened to be in the right place. If I'm an investor, I'm looking for people who are going to get lucky and happen to be in the right place. As a result, I'm spreading my bets. I'm spreading my bets far and wide.
That's helpful. Okay, Thor, I'm going to talk a little bit about the other three elements of the build, buy, partner, or invest. You're working with companies that have a lot of decisions that they have to make. The past 10 years, 10, 15 years have been about concentration of power, capital with the larger tech companies that are also leading the charge in a lot of these AI investments and rollouts. How do you guide companies as to how to think about kind of partnering with established tech companies like a Microsoft, Google, Amazon, et cetera, versus building on their own or buying a particular smaller company that might help them create a moat, or investing in this, spreading their wings, if you will? How do you guide companies to think about those four areas?
That's a great question. So, I mean, I tend to work on the venture building side as a starting point, although we often find that we're in a position of having to think about those partnerships or investment opportunities as part of those projects. But so when I think about the building side, which often opens the doors to these other areas, I start with, do we have the talent to build? And in a large organization, there's a lot of talent, but now with generative AI, there isn't always the talent or the skill set to move at the pace. So partnering can unlock those opportunities. Partnering or even buying can be critical to be able to move at the speed of the market. And so understanding the speed of the market becomes really essential. Another aspect here is, when we're beginning the process of venture building, we always start with a kind of humility about what do we actually know. We have opinions, but we start by going out and understanding what the market, what individual users, what individual organizations actually need. What kinds of pains do they have? And so getting confidence on what to build is critical. So and here again, one of the ways to accelerate that is to find those businesses that have already done that work. They've already been through a number of iterations on their product, so those learnings are already built in. So that's a value judgment of identifying where that leapfrogging might be worth the cost of an investment or a partnering or purchase of another company. And the other aspect I would just mention is this question of how much organizational alignment is required to build something and have it be successfully not just funded, but supported by the full organization. There are many times when an organization, because of other commitments or because of biases within the business, they reason that actually they would be more successful by working with an outside organization that doesn't have those organizational alignment issues. So those are some of the factors that we look at when we're thinking about build, buy, invest, partner.
Thank you, Thor. So certainly talent, internal talent, the speed of the marketplace, and whether there's organizational alignment. Chris, anything that you would add to that conversation on just how companies think about that broader paradigm of, especially when things are moving so quickly in the marketplace, and as you said, they're already behind if they haven't been developing a strategy around this?
Yeah, so I guess I'll start by saying that we actually have a relatively robust build, buy, partner, invest framework that we've developed, that we take our clients through to help them make these decisions. With AI right now, it's a little more challenging. Usually build, buy, partner, invest decisions are actually, once you have a framework and have personal agendas removed, it actually becomes relatively simple. With AI, it's a little bit harder. It's harder due to both the rate of change and actually the capital expenses required. We worked with one of the largest industrial companies in the world. I think they're one of the 5 largest businesses in the world. And we were looking at investment theses and build by partner decisions around a range of different technologies. And they came in thinking that they were going to be building in the AI space. And once we started showing them what the capital costs were going to be to build in the AI space and be competitive in the AI space, they relatively quickly switched to a partnership focus. If you're saying we're not going to build a venture on top of AI, but we're going to build a competitor to OpenAI, you better have deep pockets.
We all wish we had them, right, Chris? Deep
Yeah.
pocket. Well, just on that note, I mean, corporate VC is still increasing, which is a healthy sign of the economy. We even saw today that the economy is performing better in the U.S. than people expected last quarter. Let's just stay to that for a second, Chris. I'm going to keep with you for this question. Just how do you see CVC evolving over the past, let's call it 5 years, and what's driving that growth that companies are looking to say we need to invest outside of our traditional revenue streams in order to have profitability that's accretive?
So I think there's 2 things to keep in mind. So first of all, there's something that's completely outside of the control of corporate VCs, which is in the past, corporate dollars were not particularly attractive to startups. They were kind of, and with the exception of very late stage rounds, they tended to be a safety school. investor. And most leading VCs didn't really want CVCs on the cap table. That has changed dramatically. Traditional financial investors have become much more open-minded about non-traditional sources of funding, ranging from hedge funds to high net worth individuals to corporates. So that has enabled corporates to start to play in a more active way. But more importantly, corporate venture funds have started to become more professional and more financially focused. Historically, CVCs were either primarily strategically focused or at least attempted to balance strategic imperatives and goals and financial ones. This creates an inherent conflict of interest when it comes to what they're doing around these portfolio companies, and VCs hated it. Now, suddenly, there's an opportunity, and CVCs are taking advantage of it. Corporations are looking at this and realizing we're in a period of time when our traditional operating margins are often being squeezed. If you're in a commodity business right now, you're doing everything you can to avoid going into a commodity death spiral. Everything is being squeezed. Finding new and novel exponential kinds of growth and opportunities to return venture style returns to your investors. It's not a holy grail, but let's just call it a semi-holy grail. It is a silver bullet or could be a silver bullet for many large corporations. And as a result, people are looking at it. Leadership is looking at it from a very different perspective, and it's why you see for the first time in my career, I mean, I ran a corporate venture fund for a while, and I've not before seen CVCs in such large numbers setting up true funds, not doing corral balance sheet investments, but like actually investing out of true funds. I've not seen before so many multi-LP CVCs. We're seeing truly independent CVCs that operate outside of the parent company's control. These are shifts that you might argue have been a long time coming, or in my case, I would say I didn't see coming. And as a result, corporate venture, there's a reason everybody is taking this seriously. The performance is extraordinary. The returns are extraordinary. When you look at the top quartile of CVC funds and you look at their performance, I would like to have money in as an LP. I'll be honest.
Yeah, me as well. Certainly, they've taken a look at the returns of the tech companies over the past, 10, 20 years and want a piece of that, or more than a piece of it. Thor, I want to ask you on the venture building side, kind of corollary to that. How have you seen change? What has changed over the last 5 years? And just any advice for the folks that are here in the audience and as they're thinking about venture building internally?
Yeah, so I think there is the recognition that it takes specific processes, and the good thing is that so many of these processes, like Agile, for instance, have become widely known. But that's not enough, right? I think there was a trend for a while of companies declaring themselves to be Agile, thinking that would make them prepare them to be a good startup or launch startups. And then once that failed, it was Agile's fault. At Mach 49, we recognize that that's just one part. Having Agile-like processes is just one part. There's actually quite a bit of know-how of many pieces of that experience, ranging from, like I mentioned before, how we learn from the market in accelerated ways, and then take that into the development of value propositions and concept prototypes and concepts. So the shifts within organizations is the awareness that it really requires depth, and it requires the attraction and the support of a certain kind of operator. A venture a member of a venture team is not necessarily the same as a successful operator of $100 million business line. Like there's just different psychology oftentimes. Although some of those folks are great entrepreneurs. And so the ability to filter for those people, to find them and support them, sometimes train them, is, I think, becoming increasingly foundational for how large organizations are approaching this stuff. So we're seeing organizations get smarter and then also partner with firms like ours to get there when, trying to fake it till you make it doesn't get the results you want internally.
Thank you. Just a reminder to everyone, we're going to get to questions in about 5 minutes. So if you have them, we see a couple in the Q&A, but just put them in the chat there. Chris, I'm going to come back to you and talk a little bit about regulation. The White House is expecting to release some guidelines next week. We're all waiting to see what that is. Obviously, there's a lot happening in the US and in the world right now, so we'll see if that priority changes. But regardless of what happens early next week, there are enormous regulatory challenges associated with AI in general and Gen AI specifically. How do you think that VCs and industry leaders can work together to address these regulatory challenges?
So I'm just going to start by saying, if you're working in rapidly changing technology that is deployed at large scale and used by the world's consumers, regardless of what the technology is, regulatory issues are a primary concern. It's not just AI. We all live with this. We all understand that the combination of a fast-moving technology that is highly disruptive and a regulatory body that is ignorant can be complicated. VCs have been managing this risk for decades, to be honest. It's not really possible to predict what's going to happen. However, Thor and I exchanged messages about this, and I agree with one of the things that Thor said, which is we should assume that there is going to be some regulatory action around personally identifiable information. That is almost certainly going to happen. Beyond that, are we going to see some sort of attempt to slow down the development of AI? I hope not. I don't think it's possible. But would I put it past an elected official? No, I wouldn't. It's hard to know what the long-term impact is. In terms of the leaders in the business world and the investors, what can we do? We can do what we always do. We can become involved, we can become engaged, and we can do our best to make sure that whatever regulatory action is taken, the laws are actually well thought through and well written. That's what matters. I'm not concerned about regulatory action in the abstract. I'm concerned about extremely poorly thought out laws.
Yeah, that's super helpful. And Thor, before I get to questions, I want to ask you just about, we talk about the economic impact. There's also the societal impact on this. And, we're coming off a period where ESG was all the talk of the investment community, and it's been really challenged, right? There's a societal impact, but not necessarily the same economic impact. Talk a little bit about, do you think that the societal impact is something that should sit with, governmental structures, or is there something that a company that you're building and should be thinking about as it relates to the regulation? Chris mentioned the PII, the identity factor of this that's going to come into play, and that's we've seen tons of leakages in Web 2.0, happen even before we've gotten into this world of AI. So, just from a again, thinking about what you do and sort of helping companies build ventures, do you think that companies have a responsibility, to take on more of this regulatory side, or do you think that should sit more with Washington, D.C.?
Well, number one, I think companies have a responsibility to their own shareholders to think through the implications of what they're doing, because it will come back to bite them. as we're seeing. And so, I mean, some of this can't be measured in mere fines. Like, we know that Google has been fined billions of dollars in Europe for violating some of the European privacy laws. But there's also other harder to measure downsides to some of this stuff. But so in general, I do think that the societal impacts are a little hard to predict, other than to say that they will probably make what we see with social media look like a mere warm-up act, because we're essentially unleashing unparalleled amounts of intelligence into the world in ways, in a similar way to what we did with energy, with the discovery of steam, and then later fossil fuels, and that it just has this kind of domino effect. So when it comes to the societal issues, as Chris mentioned, expecting bureaucrats to get ahead of those things reliably is I mean, alone as the sole way of managing these things, it doesn't seem like a good bet. Just given what we've seen so far, either it will be behind, it'll be too late, or it'll be misguided. And so that's where being active to hopefully make it not misguided is so important. So it really is up to large organizations and other kinds of communities of people to speak for the experience societal impacts as they're happening, and ideally ahead of the curve. So yeah, I think that it's sort of an all of the above, but we can't just sit back and expect others to do the work of discretion alone. We have to do it.
All right, well, we're going to jump into a couple questions. We have two here. Again, if you have any questions, throw them into the chat. We've got one question on Meta's strategy and another on Microsoft, and either Chris or Thor take this one. I'm going to start with the Meta one. What do you think the long-term plan is for Llama 2? And more broadly, what's Meta's game plan? They just announced their earnings. They have their own version of what AI is, free model to date. Either Chris or Thor, what do you think the long-term play is for Meta in this space?
Establish a moat. This is about competitive. This is something that we've seen over and over again in the industry across multiple technologies. If you're behind and you've got a company that cannot be behind and you can afford to do it, give away something that other people are basing their business on. It's a classic strategy. I mean, they're doing a Microsoft to Microsoft effectively. They're saying we're gonna own all the developers. And that's kind of, I mean, I applaud their strategy.
Yeah, and so far the market is applauding their strategy too. They've had an incredible pivot from metaverse to AI. Who knows? Maybe they'll change their name from Meta to AI something or other by next year. We'll see how that plays out. Let's get to Microsoft. Certainly one of the leaders, and it's been incredible to watch how Satya has taken that company. They're launching Copilot soon. This is a question from Lori Keith. ChatGPT already rolled out their enterprise product. Microsoft's also invested in OpenAI, and Copilot is powered by their tools. Won't these two enterprise products compete against each other? And why would a company license OpenAI's enterprise model if they can get the same function from Copilot?
They're not the same. They're not even vaguely the same. I mean, this is an apples to oranges comparison. I mean, Thor, you know more about Copilot than I do, but feel free to explain.
Confusing because there's the developer Copilot that a million developers now use, which comes out of Git. But there's also, I think they're extending Copilot to all of the Office suite. I think that's what probably we were talking about. Yeah. That's the big one. Yeah. Yeah, I agree. I think that essentially OpenAI is going to be very happy to be the ingredient, AI, generative AI tool for everybody. I mean, they win the more Microsoft uses it. The applications for enterprise GPT are different. They're going to like AWS allow 1 million startups and corporates to use those tools to build new things. So they're going to be paid in both directions. All because all of those same folks use Microsoft, so they make it a compounding amount through this strategy. It is impressive.
Yeah,
Just yeah.
I actually
Go ahead,
think
Chris.
Microsoft is in an extraordinarily good position, because they win either way. But the great thing is that OpenAI is in the same situation. They win either way. One of the things that people need to be careful about is not conflating OpenAI and ChatGPT. Copilot is effectively a competitor to ChatGPT, is the easiest way to think about it. OpenAI, ChatGPT is one of their products. That's great, but Copilot uses OpenAI. So this is a weird sort of symbiotic relationship, and we're going to see a lot more of this.
Yeah.
This is the emerging model.
And I will say that, from we talked about partnerships earlier, that we're seeing, especially in areas like climate and sustainability, but we'll probably in areas like AI, because of where data exists, consortia-like approaches become more and more attractive. And so that strategy and kind of combinatorial product approach becomes more and more attractive. So it's definitely a new chapter. Feels like it's being born right now.
Just on the notion of consortia, do you believe that there will be a coming together on a partnership side horizontally or vertically? So meaning that the tech giants will all get together, or subset of them, or will be more like the oil and gas companies or the consumer packaged goods companies will get together to partner and figure out the best strategy to deploy these AI tools?
I very much doubt that Google and Microsoft and Meta are going to get together and partner on this. I think we can assume that it will be vertical partnerships.
Yeah, they'll partner on certain kinds of lobbying the government for certain kinds of things. But when it comes to the marketplace, I think I agree with Chris on this one.
We have about 5 minutes left. Again, just a reminder, if anyone has any other questions, to just throw them into the chat. But I'm curious to get your perceptions on Google and Amazon in the space. Microsoft has definitely been an early leader. Google is making some strong inroads. Amazon seems like it's a bit behind. Just any thoughts, Chris? Maybe start with you. Any thoughts on sort of where they sit in the marketplace today?
I mean, I think you're correct. But I think it's important to keep in mind that both Google and Amazon possess assets that a company like Microsoft does not possess. The data that Amazon has, the data that Google has, in both cases are truly unprecedented, unless you're going to be talking about Tencent or Alibaba. I mean, I would never bet against a company like Google when it comes to AI. They have started late. Their focus has been on other things. But AI represents a potentially existential threat to their business. If you think about how Google makes money, if all of a sudden the PageRank algorithm is no longer the center of the world, it's going to be problematic. So they're not going to miss this. And they have all the assets to compete. I don't know exactly how they're going to do it, but I would never bet against them. Amazon's more interesting because Amazon, I can see them developing very, very purpose-specific AI that would be unlike anything that anyone else could possibly do. If you wanted to do a shopping-specific AI, outside of a couple Chinese companies, no one in the world can do what Amazon can do. In addition, unlike everyone else, their cost of operating their AI systems is exponentially lower than everybody else is because it's underwritten by AWS. So they can afford to really invest in it. So yes, they're both behind OpenAI, and you can say they're behind Microsoft, but that's misleading. That's simply a matter of there was a really smart corp dev person at Microsoft who made a really good decision to invest in OpenAI really early. That's now paying off. But really, Google and Amazon are behind OpenAI, and I wouldn't bet against either of them.
Yep, Microsoft's corp dev team definitely deserves a raise after this. The competition is coming. We have one other question that just came in. How can small startups compete with the large players if the large players are just going to create the features themselves and launch them out of their own tools?
Yeah. But this is, in a sense, this is an age-old question, right? I mean, we've always had this question, like, how can I compete with the resources and the data that a large organization has? And the answer is, multifaceted, but it includes, there are structural reasons why large organizations won't do various things. An example, and this is just top of mind for me. I recently saw a demo of an AI architect, and the AI architect allowed users to do was design an entire house that was specific to the particular area they lived, because it had knowledge of the local codes. So it was able to iteratively develop a home design for you, or an office design, in a way that completely disrupted a traditional architect. But of course, and if you want to file for a permit, you still need to go through an architect. So structurally, there's very good reasons why existing architect is not going to recommend you use this tool, but a more innovative architect might say that this is the way to get a unique advantage. This is the future of architecture is not doing a few large projects a year, but rather doing a mass number of AI architects blueprint reviews. And in so doing, disrupt that model. I use this as an example because this is how I think we've seen many startups rethink how problems can be solved using new technologies, and so the ability to step in, bringing it full circle to a beginning of the talk, to what is breaking, what is going to break given this new technology, and how can new ventures lead to extraordinary growth for those mavericks, whether they're startups or far-sighted the corporates. That is really what we're able to do now with the things we've talked about today.
As Thor said, this is something we've been dealing with forever. If this sort of worry were real, were likely to happen, then Larry and Sergey would never have started Google and never would have been funded, because we already had a search engine. We already had multiple search engines. They no longer exist. They were put out of business. Why? Because a startup developed a better way to do it. If now you look at it the opposite, oh, well, what if we start something and a large corporation says, oh, we'll just add this to our features? My response to that is Chatter. I don't think many people even remember Chatter. Chatter was, of course, Salesforce's attempt to create something to compete with Slack. Now, in the end, they decided, okay, we're going to lose on this, so we're spending billions of dollars and we're just going to buy it. The reality is on both sides, both in terms of, can you compete with incumbents as a startup? Of course. We have decades of examples of startups destroying incumbents. Can you protect against incumbents simply stealing your idea and launch it? Yes. Again, we have decades of examples of this. It's called being an entrepreneur.
Be an entrepreneur. That's a great pin to this session. We could go on all day, and I look forward to doing many more of these and meeting you in person. But I want to thank everybody for joining us today for this timely conversation. Chris and Thor and Mark for joining me in the discussion. I think it's the most exciting time to be thinking about building or investing or partnering in this space. So look forward to meeting many of you and coming on the journey with us. Reach out if you have any questions, and we hope to see you again very soon. Have a good afternoon, everyone.
Thanks a ton, y'all.
Thanks.